Right, let's get good at this pre-populated spreadsheet then, using the December 22 exam amended. So here it is, and basically we have to work out a revised goodwill. So let's have a look at the scenario. We acquired 70% of S for 20 million of our own shares at a market value of $2. So we're giving 20 million of our shares, market value of $2. The fair value of consideration then is 20 times 2, 40 million. But we're also going to give 5 million more of our own shares in the future if their profits equal 4 million, and there's a 20% chance of that happening. So if we're offering more of our shares, more consideration in the future, we call that a contingent consideration. It's dependent on something. Now you bring that in at its fair value. So 5 million shares, they're worth $2 each, and you think their fair value is therefore 10 million, but there's only a 20% chance of it happening. So the fair value isn't 10 million, it's 20% of 10 million, which is 2 million. Okay. Next then, it says NCI hasn't been entered into the goodwill calculation. Obviously it should be. And it said after discovering this error, they want NCI to be calculated using the fair value method. Okay, so we're going to now calculate NCI. And it says S has 13 million share capital and the market value is $4.20. So the fair value of S is 13 million times 4.2. We want 70% of it, so NCI wants 30% of it. So 30% of 13 million times 4.2 is 16.38 million. Now we've got to put that in. Rest the fair value of net assets. It tells me the fair value of net assets is 48. So we know that goodwill should be 10.38. What they've done, though, is they've got a bargain purchase of 8 million because all they've done is looked at the purchase consideration of 40, take it off the net assets of 48, and have got an incorrect bargain purchase of 8 million. So let's deal with that then by adjusting the pre-populated spreadsheet. And the way we're going to do it is we're going to work through the goodwill working and put it in as we go along. So first of all, you need to think, right, what's already included? Well, the fair value of consideration is, and the fair value of net assets is. And they've therefore got a bargain purchase of goodwill of 8, which is wrong. So we need to remove that first of all. So straight away, take out 8 out of goodwill. That would have gone to retained earnings, so take 8 out of there. Now we can carry on. Fair value of consideration next then. 2 million, the extra 2 million of our shares. So goodwill, contingent consideration, goodwill, 2 million. Our shares, we haven't issued them yet, so we can't put it to share capital. We're going to put it to other equity. And then finally, NCI. So NCI, we think should be 16.38 million. So you put it in NCI, add it on to goodwill, 16.38. Where else is going to go? NCI 16.38. So you can see all we've been doing is working through the goodwill one step at a time, going from left to right. So we started off with, first of all, removing that, that's minus 8. Then we put in the 2. That gets us to minus 6. Then we put the 16.38, and that gets us to the goodwill of 10.38.